So tens of billions of dollars have been wiped off the region's markets in response to the disappointing news from the US, Europe and China, and the deepening fears that global growth is slowing. European markets look to be following suit as investors run for the exits, shunning risk to seek the perceived safety of some government bonds and the US dollar. It left the analysts deeply divided as to how this would play out at tomorrow's Reserve Bank board meeting on interest rates. Here's Philip Lasker.
The GFC, it's the crisis that keeps on giving.
What we're seeing is a big increase in uncertainty.
Driven by the economic and political turmoil in Europe, new data suggesting America's recovery may be faltering and a slowdown in China.
That global environment across the three main engines of the global economy is looking a lot weaker than a month ago.
So equity markets throughout Asia tumbled as investors, worried about a global recession, fled to the perceived safety of gold and some government bonds. At one stage, Japan's market hit a 28-year low, and most other markets throughout Asia dived between 2 and 3%. Time for a treasurer's pep talk.
We should never lose sight of the fact that we face these challenges from a position of strength.
The gloom may be knocking markets way off track, but not the government's surplus.
The settings that we've got in the budget are entirely appropriate.
The extent of the global threat will determine what the Reserve Bank does on interest rates tomorrow.
I'm not worried so much about the domestic economy, I'm worried about what the global economy can do to Australia, and that's why we think the RBA needs to ease the 50 basis points.
But the ANZ says a 25 basis point cut is all that's needed.
The more the Reserve Bank cuts, the less scope we have for further rate cuts. And I think that means that they need to be very mindful of easing too much too quickly if indeed there was some crisis to come out of Europe that caused a major sort of global financial crisis.
I think a 25 basis point rate cut risks wasting the ammunition. There are 375 basis points between here and zero. Let's make them reasonable steps if we need to make them.
Still others say the RBA won't cut.
If it did so, it would be preempting a lot of data that's coming out domestically in the next week or so, and it would also be preempting some political decisions that are coming out of Europe, particularly the Greek election. We think that there's no harm to be done in the Reserve Bank actually waiting another month.
If the Reserve Bank does cut interest rates tomorrow, borrowers have every reason to expect most, if not all of it, to be passed on, because the lenders kept a lot of it last time and they've got most of their overseas funding in place already, which suggests the RBA might only need to cut 25 basis points, saving more ammunition for what looks like an unstable future.